It was an anemic 10-year bond auction for Japan. The bonds had their worst monthly performance since 2016, had a huge sell-off in treasuries, and European debt follows that. Dani Berger has more. Dani, what was behind that failed auction?
Alex, it all has to do with Kuroda's plans to steepen the yield curve, and those plans have been stiff enough to really alarm investors. As you say, this very poor bond auction, we saw the bid to cover ratio for 10 years come in at 3.42. That's the worst since 2016. The reaction was swift. We saw JGB futures sell off their most since 2016, and that forced some margin calls for investors. That cash market, once it opened, yields spiked. Then we saw a reaction as well as spillover in Europe and in treasuries too. So we have investors starting to trade on this narrative that they're going to shift from bonds into stocks. We have the BOJ buying more ETFs than bonds most likely. They've signaled that they're going to slash some of their purchases in October. So we're seeing investors follow on to that narrative. They really have a BOJ stamp of approval here, with Kuroda sounding alarm about how low yields have gotten. So those plans to steepen the yield curve very apparent in this anemic auction, Alex.